It's not the same scale, right? This is just it's a pattern in a sense of odds rather than a pattern in a sense of price, right? So your traditional chart patterns are not going to work on the fractal because it's a completely different way of displaying information. Pretty much when you're trying to grab levels, make sure you orient yourself within this candle, right? Within the nearest candle, because price here is going to be completely different than the price at the other candle, or in a completely different way. It's going to be completely different. See how over here, this 20% odds is 342, but over here, it's now 349. So make sure when you're grabbing your levels, or grabbing levels that you want most recent, need to be grabbed from this, like orienting yourself within this candle, or else it's going to be completely different. Um, Moving on. Uh, um, we're gonna go to the option analyzer. And the option analyzer here, this pretty much can it shows you, it loads option contracts and allows you to see pretty much percent gains at certain price points, theoretical percent gains on option contracts at certain price points. So if we're gonna load May 30th. All right, let's say QQQ is gonna bleed down to 345 with 44.92. We can see what contract is going to give us the highest gain, right? So you can use this when assessing and trying to figure out what position you want to play for a any type of play that you want to play, right? So that's how you use the option analyzer. It's really simple. There's another thing called the market maker move. The market maker move is pretty much a quantification of data, past trading data that shows where big money tends to like to move towards, because institutional traders, they don't make money off of selling contracts. They make money off of hitting your stop losses and moving price to certain points. It's just how they make the money. So at our ceiling, this is where price would want to close towards the end of the day if we were seeing upside. The washout is pretty much how much money the market makers are going to make at that price point if we close there. And then our floor, inversely for downside, if we close down there, that's what the market makers are going to be making. So the market makers want to seek to pretty much close around either one of these by the end of the day, or at the peak money line. Peak money line is kind of like the middle of the two. But there's also a lot of money in the market. And that's where institutional traders also make quite a lot of money. Moving on, we have something called the market maker dead zone. The dead zone is pretty much a range where market makers like to chop price around to kill contracts and force people's stop losses to be hit to generate liquidity in market. So if you're entering positions in this area, it's likely not a smart idea, because your contracts are likely going to get killed because you're going to be range bound for a little while. Moving on from the option analyzer on the market maker move, we're going to go on to generate buy signals. Generate buy signals is a little weird, but pretty much what it does is you input your last previous downtrending candle. So in this case, our last candle that we had that downtrended was an L2 before we went into an uptrend, right? We went down one, down two, because it closed below again, down one, down two, and then the trend reversed and we went up, up. So we're going to go to generate buy signals. We're going to select our L2 all here, and we're going to select our next trading days. And we're going to see pretty much what this can do. It can give you a kind of like a probability of where price could go. This is I'm not the biggest fan of using this, but if you want to use this, I would recommend, instead of using 200 days to load, instead of using 200 trading days, I'd recommend using 5,000. This will lag your application, so just give it some time. But obviously more data is better, especially when you're trying to determine where price is going to go. So loading with 5,000 days will give you a better and more accurate idea of where price is going to go. So we go to our generate buy signals. We go L2. Clear that. All right. And as we can see here, this looks a little bit different than with 200 days. Our targets are changed. The amount of support and resistance is changed, and the percent odds are changed. So use this if you're going to use the generate buy signals to find your odds and where price tends to try to go to. or where it might want to go to based on a percentage, make sure to load higher time frames and higher days. Switch that back so my application doesn't crash. All right, bouncing back to the fractal graph, I forgot to mention this. There's a bunch of different tools that you can use over here on the right-hand side in this little toolbar. The one that I tend to use the most is the green and red bars. These are your percent odds. Pretty much this takes the data that you see here on the graph, and it pretty much uses calculus to determine patterns and determine the likelihood of breaking certain price points in a certain trend. So we can see here that price rarely ever goes to the 10% or below the 10%, and then goes up to the 50%, and then, or the 20%, the 50%, the 80%. So we see price tends to propagate more in between the 80% because it's got a higher chance of hitting it, right? And remember, a fractal is an ever-repeating cycle, patterns, and trends. So these outlier moves are less likely to happen because it originates further from pretty much the source pivot. Moving on, we have something that the fractal provides. It's called the average strike range. This is really good if you're trying to find swing plays. It's what I use when I look for swing plays. Price tends to try to stay outside or inside the average strike put and average strike call range. When it's outside of its range, it usually tends to re-enter that range within the week, right? For instance, Lucid did that when I my first ever really good play. I used that, and that really helped. And we re-entered the range, and it was a really good play. Moving on, we're gonna go. Where do I want to go next? We're gonna go over the Bollinger Squeeze. I put out a like write-up on this. I don't know if everyone has access to it. I think premium members do, but I put up a write-out on this, what the Bollinger Squeeze is. Pretty much, you know what the Bollinger Bands are on like an indicator. It's pretty much the same thing. It's just represented in a completely different way. You just add quick wave configuration. I like to use the Bollinger Squeeze, the Bollinger, the Wave 760, 50 days to load, because it works well. It's just my favorite configuration to use for it. But you can definitely use it on things like the 5 minute. 5 minute works great for it too. Obviously, the higher time frame you go on, the larger the trend you'll catch. So if you're doing it on the 5 minute, remember that each candle is a representation of 5 minutes, not so much. You won't catch a bigger move on that if you were to use the hourly, because each candle in here is an hour. So I'm gonna zoom out. So down here, I'm gonna increase it and make it larger. We have pretty much the Bollinger Squeeze, right? And we can see when price enters this yellow area, we get quite stark trend, like directional moves. For instance, on May 1st, we had a pretty big short squeeze. We entered this yellow area, we bounced around, and we hung around, and we started going short, and then this picked up steam as we left the yellow area. This is where you can look for it to start to squeeze, is in the yellow area. The color of the line being red indicates it being a short squeeze. So when we exit this area, the color of the line is what's important to determine if we're going to squeeze in a certain direction or not. So we squeezed out of this direction short, out of the yellow area. We squeezed and went short, and we caught a pretty big price movement off of that, like a $4 short squeeze, which is pretty good. And that was only in a couple hours too. That was in 3 hours. So that really didn't take that long to squeeze $4, and that's quite a lot on your option contracts. And you can see multiple other times where it happens. Here's an indication of a long squeeze. We stayed in the yellow area, we stayed green, we exited green. and we just squeezed to the upside. I think that was one of our trend days. Oh yeah, that was one of the trend days. We just pumped. I don't know if there's anything I'm missing. Anyone has questions, or anyone knows anything that I'm missing, just count me
I have
out.
a question.
What's up?
So, I know that using like different waves and like time frames is good depending on what you're trading regarding like options, futures, crypto, whatever. What would you recommend the best like wave and time frame setup is for futures?
So when I trade futures, I tend to use the Wave 7 hourly for my general bias, like for the entire day.
Mm-hmm.
Um, and then when I'm just looking and doing like live analysis and seeing what price is doing, as the day goes on, I'll use like Wave 7 5 minute, or another really good one is Wave 25 minute. That's also really good.
Okay, but usually
Those
the
are the-
data I get, like I fuck around with it a bit and just like try to find a preference, but the data is like always super messy. So, thank you.
Yeah, for sure. No, am I missing anything? I don't even think he's at his computer. I think he just left.
Damn.
Uh,
Oh wait, Paul. What about the algo? I didn't.
the algo. All right,
Yeah.
I'm not really sure how algo works, but
Yeah.
I do have a general like idea of how it works.
All right.
So algo is kind of like an automated setup finder. This was just added, and I haven't really messed around with it, but it pretty much it tries to find setups for you, based on certain parameters that you can set. For instance, let's see. All right. Can I extend that? Yeah. So, for instance, this one's it's finding if it's above or below the peak money line. Um, if it's above the peak money line, you can expect price to go bullish. Below, you can expect it to go bearish. So that can be a signal. And show them how to switch aggregation times. Okay, I'll do that. But this kind of just gives you this is an automatic setup finder. Just based on what the fractal the information that you can find manually, it just does it for you automatically. I'm not super sure how it actually works, but we're gonna look at one of these. Let's look at MU. Wave 7, 60 minute, found above peak money line, so it wants us to go long. Let's see it. Or no, it wants us to go short. Okay. So it kind of just finds you setups that you can look at. Like this is all like machine generated. Like this is automatically found just from the program itself. So this isn't really a person doing this. This is just someone or the machine itself, the program itself finding these setups. So yeah. I'm gonna go back on how to change aggregation times manually. So if you don't want to, create a new, let's say preset, say you want to switch. Right now I'm on the Wave 25 minute. Let's say you want to change it to the Wave 20 hourly. You go down to the bottom of the GUI. You go down to the bottom of the GUI. There's a little box that says aggregation, which is pretty much what time frame each candle closes. And pretty much you have multiple options. 1 minute, 5 minute, 50 minute, 30 minute, 60 minute, and daily. So if you want to go to the Wave 20 hourly, you can just set it to 60 minutes and it'll update the graph. And there you go, that's the Wave 20 on the hourly. But if you just wanted to add a new preset, you can just always add it here. And then it'll save and just stay here. So you don't have to keep, changing things manually as you go. And I know a lot of people have been seeing my free analysis on the yellow box method. I did a class on it, but not too many people show up for it, so I can run over it again.
Yeah, I have a question real quick.
What's up?
Do you know how Bread gets all of his plays? Cause that man be posting fucking bangers, bro. Like,
Um, he's he's just a wizard.
bro,
He's
Been doing this shit for some years.
he's a wizard. I aspire to be like that. Like, that's crazy.
I'm trying to get like him, bro.
Aren't we all? No. I'm pretty sure he has like a watch list that he just looks at, and he sees things that are
Everything he
interesting to him, and he just throws it out there.
Yeah.
And they just hit. All right. We're gonna go over how to get the yellow box method. This is my prized possession. This is my baby. This is pretty much my strategy that I use. It's pretty simple. You want to be on the wave 7 on the hourly time frame. It's very important with 50 days to load. Extremely important that it is this, or else it will not work. Or at least it will not work the way that I use it. And you'd have to tweak it a little bit. You're gonna come in, it's gonna look like this, and you're gonna click up here, there's this little box to expand this histogram. And then what we're gonna do is we're gonna come down in the bottom right of that histogram, click this drop down arrow, I'm gonna select sort by today's close. And we're gonna unlock our mouse tracking. Next thing we're gonna do is we're gonna come down here and set our pivot to the current pivot. This is where price currently is at, and that's gonna help us find our levels. So our yellow box is gonna be 347.66 to 349.27. Literally the yellow box is this yellow box. The yellow box represents pretty much the probable range of where price is gonna propagate each hour. Because each one of these candles is an hour, because we're on the 60-minute aggregation. Each one of these candles is an hour, and most of them, like most all of them, close within or stay mostly within this box. So using that, the yellow box method pretty much just plays the breakout of the zone into the next zone. So to find our support zone, which is our green zone, we're pretty much going to find a level or a line where we get a considerable amount of taps to all these candles over here. So if let's set it here. This is our line right here at 347.13, and let's move it up a little bit to 347.37. We'll go with. We can see how most of these candles that break down to the downside of the yellow box, most of them touch or go through. This is going to be our minimum support, meaning that this is our minimum target for when we break out of the yellow zone to the downside. This is the first thing that we're going to target, because all of these outlier moves make it right there or continue past. For the bottom of our zone, which is the maximum support or the maximum outlier move, it's just going to be whichever candle is the most outlier, the furthest one from the yellow zone. Whichever candle, you're going to find the price which is the furthest away. So in this case, it's going to be 344.95. Alright, and we're just going to pretty much inverse this for the upside. We're going to find the most candle taps. Pretty much just look here, find a price where it looks good. Let's say, I'm liking 350. Let's do 350 on the dot. So 350 on the dot gets us a good fair amount of taps for outlier moves. And then again, that's going to be our minimal target to the upside. On futures, this is a bigger move. Usually on NQ it's like a 30-point move, and on ES it's like a 7-point move. So, but on like the Qs, it's really just like a 60 to 80% or 60 to 80 cent move. And then our maximum resistance, or the top of our red zone, is going to be, again, the candle which is the furthest away from the yellow zone, and the top of it. So this is going to be around 355.61. 355.61 will be the top of our red zone. And again, you're going to play this. You're not going to play this. You're going to stack your confluences. You want to find points of interest to play this, but ultimately you're going to play momentum outside of the yellow zone to the next zone respectively, and then you're going to play momentum and pretty much with your other confluences play all the way up to the maximum resistance or the maximum support. It doesn't always get hit, which is why you need to kind of have your own intuition and understand what's going on. But more than often than not, every day the yellow box makes it to at least one of the minimum targets. So every day you should have at least one play that you can take, because it'll make it there. But my win rate on the strategy is like, the guy who came up with the strategy, his win rate's like 85%. My win rate is a little bit higher than that because I haven't been doing it as long. It's like a 93% win rate right now. There's only been a couple that I've lost on, but that's not even the strategy's fault. That's just me being stupid. So if you play this right and you play the first break out of the zone, you're pretty much going to get it perfectly every single time. Super easy, super simple. Literally a baby could do this. So yeah, that's how you play the yellow box method. It's super easy. I give out analysis on it every day. I gave out a bunch of them for tomorrow. It's in the YBM alert analysis, so if you want all those, go ahead and take them. I did one for NQ, ES, QQ, Tesla, and CAT. Those are all really good ones that work really well. So if you want to use those, feel free. Does anyone have any questions?
Yeah, I was just asking to throw this out there because I'm, sort of confused by it all. So while we're in the trading day, are these points within this yellow box range, are they continuously updated, or do you just need to be like refreshing it over and over, and yeah?
So you wanna chart the yellow box when the market is closed. On futures, This is before after hours starts. You want to chart between New York and after hours, and on normal stocks, this is just when the market's closed. The reason why is because it's just going to give you the most accurate levels, because after hours market like price action is weird and it doesn't move the same way as New York because there's just less volume. So that's going to affect how what numbers it gives you, because those 7 hours or however long after market is going to affect your probable range, because price is going to be moving differently.
Okay, yeah. So for instance, real quick, off these calls you made on May 26th, like where you chart NQ, ES, CQ with your yellow, red, and green boxes. How you play off of this is in the red zone. Are you're biased towards, like, you've got a bearish bias when it enters red, and green the opposite? Bullish bias then?
So pretty much, as you get towards the extremes of the zones, you're getting more and more to the outlier edge, or you're getting more and more, like, pretty much the further you move into the zone, the less likely you are to continue moving further, because that bottom of the zone is a representation of the maximum move that price has made in the past 50 days of trading. It's the maximum it's ever made in the past 50 days. So knowing that, you're probably not going to make it there. So you can use that as a bias towards playing back to the yellow box, but the strategy really is to play the breakout from the yellow box into one of the zones, and then play continuation to the next targets, or until you run out of momentum. But you definitely can play the breakout back to the yellow box. You just need to have good confluence stacks, because it totally could just not go your way. There's been a couple times where that's just happened, where it could have definitely gone back to the yellow box, but just didn't. Sometimes you will just retrace back to the yellow zone. But on trend days, especially, open up in that red zone, and you're not really breaking down. Like, I'd say within the first 30 minutes of the market, you're not getting back there, or you didn't do it in pre-market. I wouldn't look to play the retracement back to it, because you're holding that level, right? You're not breaking down back to the probable area. So it looks like we're just going to hold that level and continue forward bullish. Does that answer your question?
Yeah, this might be like a I don't know what, but if the charting for the relative levels is done after market hours, how would you be able to catch these moves? Like, how would you be able to catch them? Because it looks like here on ES, isn't this isn't yeah, that's why I'm confused. Wouldn't it make more sense to play into back to the yellow box as opposed to, like, how would you be able to catch moves into green or into red?
You're playing the breakout from the yellow zone into the red or green zone. So and like I use a vector indicator. I have I look thing pretty much in my area of interest, which is the top or the bottom of the yellow zone where I want it to break out, and then you just play it. Most of the time will make it there, because remember, each of the candles where we grab the zone from is a represent more than often than not. Those candles, when they broke out of the zone, they made it to where we marked in the bottom of our red zone, right? So
Right, yeah.
breakout with other confluences. It's just a way to represent how price has been in this area. Each hour for the past like 50 days, the price has been in that area, right?
Yeah, thanks. Okay.
So do you understand it now?
Yeah, a little bit better.
Okay. It's really just you're playing the break to the start of the next zone, and then that start of the zone where you take a little bit of profits off, you play that to the bottom or the top of the zone, depending on which side you're on, to the max outlier move. That's pretty much it. It's really simple, and it works out quite a lot. It's pretty consistent. Does anyone else have any more questions?
Yeah, I got a question for you.
All right, let's hear it.
So, where would you draw the red box? Would it be from the top of the red to the bottom?
So the entire red box is pretty much your average move, which is where we find most of these candle taps. Where most of these candles that break out to the top, we find when most of them touch, which we said was like 350 on the dot. And then that zone goes from 350 all the way up to about 355, let's say 57, which is where the top of the outlier move is, right? So that's your entire red zone. It's an entire zone. 350 to 355, 57. Because it's your average range to your max range, right?
And then that would be the same for the green zone too?
Yeah, pretty much the green zone is just the same thing, just
Okay,
flip to the
thank
bottom. Yep. And remember, make sure you're sorting on current. If you don't, this will change your numbers up. If we did it on pit, look what this does to the numbers. If we come up here, instead of being like 350, this is now 332.65, and that's just wrong. That's nowhere near. Or even if we did like new pivot, it'll be slightly off. That's 349.14. Whole almost $1 off on QQQ, which is a lot. So just be aware of that. And also, 349.14 is within our yellow zone. It's like if you notice something off, just make sure be on current by today's close, and you should be good. We have any more questions?
Yeah, I got one.
All right, let's hear it.
Can you go over the option analyzer for intraday
Option
trading?
analyzer for intraday trading. Okay. The only thing about the option analyzer that I really use contracts and finding where the ceiling is or the floor is during the day, because the ceiling and the floor change during the day. They're not the same all change as we get closer and closer to the close, because the price point where market makers want money. So if I'm looking at the option analyzer and I want to, let's say I want to enter a short position, yada yada yada, okay, I would literally just load the contracts up and say we're going to set it to my entry. I didn't mean to calculate. Okay, we're going to wait for that to finish. Right. We're going to load our on May 30th. And let's say, you know, I'm entering at 348.40. And I want to see, you know, getting if QQQ reaches 346.66, I can see what contracts are going to give me the best percent gain, as well as what contracts are like what their prices are, etc. So we can see here that 352 puts would net us a 38% gain, and they cost $534, or no, they cost $387 to fill, but at our target they'll cost $534 for a $147 gain per contract for a 30% total gain. But yeah,
And
that's
And can you use the analyzer with the YBN?
yeah, totally. You totally could. You can see if price is at, you know, the bottom of our yellow box method, or the bottom of our yellow box, we can see what contract I should use if I want to take my profits at the start of the box. We can see what the contract's going to be worth, so you can have an estimate for your take profit. You can do the same thing if you want to do like the bottom of the zone. If you're moving to short for the max out layer range, you can set it to that. It's pretty much the option analyzer just takes the contracts, it finds their value, and it runs the math and just determines what that contract's going to be worth when you get to the price point that you represented from the current price that you can see right here. So if we're gonna some ridiculous move, let's say we absolutely bled like a crazy bleed to 337.25 by the end of the day tomorrow, which is absolutely ridiculous. $10 bleed. It could give you a contract like 342 puts that costs $28, but by that price point, if you were to fill at 348.40, that price point, you're looking at a $447 gain, which is a 1600% gain. So the option analyzer just pretty much just takes contracts, it does the math, runs the math, and shows you what you're going to be making from certain price points.
Perfect.
Yeah,
Thank
sure,
you,
bro. We got any more questions?
I got another one for you.
All right.
So do you
Sure.
have this up while you're trading, or do you just look at it after market closes?
I usually look at the fractal throughout the day. The program itself updates with new data every 15 minutes, so it is going to be slightly delayed, but I do look at it pretty much to see on a fractal level like what price is actually doing, and seeing possible movements before they actually happen, because that's the whole point of the program, is to identify trends and price movements before they actually happen, just based on patterns. That's really all it is. But I do keep it open during the day. I do use it to live signal when I'm signaling through Discord. I do just use it for my own analysis, and just, yeah, that's pretty much it. But if I'm using it
Okay.
during the day, I'll typically use it like on a 5-minute graph, because I don't want to be using an hourly graph, because it's not going to be updating like quite the same as a 5-minute graph.
Okay,
You know what I mean?
thank you.
Got any more questions? All right, cool. If you do have a question and you just don't want to talk, you always hit me up. Just DM me. I'll answer any questions you guys have. But thanks.
On my face. Got up on
Coming.
my own.
But yeah, that's pretty much just wraps it all up. Thanks for coming.
All right.
If you need anything, just DM me.
Thank you, Paul.
Yeah, for sure, bro.
I'll record
you.
this. I'll tag you when I post it. All right.
All right, cool.
All right.
Thanks,
all right,
brother.
All right,
Yeah, for sure.
all right little bro. All right, little bro.